All right, so today I will be talking about the chapter of national income. All right, chapter of national income. Okay, so this is the most basic chapter in the economics, but simultaneously it is, seem to be complicated and difficult for the student. Okay, so without wasting time, I will start from here. Okay, so first is national income. So what is national income? National income generally entails about the total income. It entails about the total income of nationals. National means resident of a country. Okay, so this is the total income of nationals in a particular year. Okay, in a particular financial year. Okay, in general. Okay, and generally it is confused. It is confused with the term GDP. Okay, so what is the GDP here? GDP in general, it is the value of goods and services produced in a particular year, right? Produced in a particular year. I'm talking in general over here. I will be talking in detail technicalities of GDP very soon. All right. So value of goods and services produced in a particular or financial year. Financial year. Okay, financial year. All right. So national income and GDP both reflects both reflect reflect economic growth. Okay, economic growth. So even if GDP if GDP, right, GDP is increasing, or if national income is increasing, both reflect the economic growth of a country, right? Economic growth of a country. I hope you understand. Very simple one. Okay, very simple one. Okay, also both reflect also both reflect size of economy. All right, size of economy. Yes, both reflect the size of economy. Okay, so generally GDP and NI, or national income, they are talked interchangeably, and both reflect size of economy and both reflect the economic growth of a country. All right, so I'll be discussing each term over here. The first let us start with the gross domestic product. Gross domestic product. Okay, gross domestic product, or GDP over here. Gross domestic product, or GDP. Okay, let's talk about the GDP over here first. Okay, so what is the GDP? So if I write here, okay, so GDP, it is the money value, or monetary value. It is the monetary value of all final goods and services produced in a domestic territory. Domestic territory. Right? During a financial year. Okay. So I have written here GDP, it is the money or monetary value of all final goods and services produced in a domestic territory during a financial year. Okay. So generally, so here here there are three technical terms. One is the final goods. Okay. The second one is domestic territory, and third one is the financial year. Okay. So three technical terms are here: final goods, domestic territory, and financial year. Okay. So I'll be talking each, right? Each. तो अगर यहाँ हम बात करेंगे फाइनेंशियल ईयर की, व्हाट इज फाइनेंशियल ईयर? ओके, व्हाट इज फाइनेंशियल ईयर? Okay, so generally financial year span from 1st of April of a particular year, 1st of April to 31st March. Okay, suppose this is 1st of April of 2024, okay, and 31st March of 2025. So this is financial year of 2024-25. I hope you understand. Okay. So in financial year, which is generally of 1 year tenure, there are 4 quarters. Okay, 4 quarters are there. Quarter means the tenure of 3 months. So quarter 1, quarter 2, quarter 3, and quarter 4. Okay. Similarly, if you talk about financial year 2025-26, okay, 2025. So again, now second financial year, this financial year starts or begin from 1st April again, 1st April to 31st March. Okay, 31st March, right? Now 1st April begin from 2025 and 31st March ended in 2026. Okay, so this is financial year 2024-25 and second financial year 2025-26. Okay, again it will be having 1 year tenure and there will be 4 quarters. Okay, 4 quarters: quarter 1, quarter 2, quarter 3, and quarter 4. So whenever we compare the GDP growth, we generally compare from quarter 1 to quarter 1. Okay, all right, just a second. Quarter 1 to quarter 1, we generally compare from quarter 2 to quarter 2. Okay, quarter 3 to quarter 3 of next financial year. All right, it is not possible, generally. So what I'm writing here is that growth is considered from previous year of same quarter. Okay, you cannot compare the growth of quarter 2 of this year and quarter 1 of next financial year. All right, so this is the point you have to remember. All right, okay, so here I have talked about the financial year. Okay, now second is I have written here in the concept of GDP is it is written here the final goods. Okay, final goods and services. All right, final goods and services. Okay, so generally goods and services are of 2 types. Okay, generally of 2 types. One is the final good. I'm sorry. Okay, so I will correct over here. So generally goods and services are of 2 types. Okay, one is final goods and services and second one is intermediate goods and services. All right, so final goods and services can be again categorized into 2. One is consumer, second one is the capital goods. Okay, so capital goods are लार्ज गुड्स, नो, बड़े गुड्स होते हैं कैपिटल गुड्स, जिन्हें हम इंडस्ट्रियल पर्पस के लिए यूज करते हैं, है ना, जैसे मशीन्स इसमें आ जाती हैं, मशीन्स आ जाती हैं। कंज्यूमर्स गुड, जो भी आप कंज्यूम करते हैं, है ना, अपने घर में खाने में पीने में, उसे हम बोलेंगे कंज्यूमर गुड्स, राइट। तो ये जो फाइनल गुड्स एंड सर्विसेज हैं, ओनली दे आर नो दे आर only they are counted into GDP. Only they are counted into GDP. Intermediate goods are not counted. Okay. Examples of intermediate goods are raw material. Okay. Raw materials are not counted in GDP. Okay. Not counted in GDP or national income. That you have to remember. All right. That you have to remember. Okay. So two terms I have here. I have talked about two terms. First one is the financial year. Second one is the final goods and services. Okay. So I will elaborate further here. I am taking example of a tire. All right. Just a second. I'm taking example of a tire. Okay. If a tire, it is used by manufacturing company, you know, car manufacturing company, it will be considered as a intermediate goods. Okay, it will be the tire will be considered as a intermediate goods, and it will not be counted in the GDP. Okay, why? Because already car will be counted, in the GDP. Car will be counted in the calculation of GDP. So double counting is generally avoided. So since car already has been counted in the GDP, its tire will not be counted in the national income or GDP. Okay. But if it is used by a vehicle owner, if this tire is used by the vehicle owner to replace the older one, to replace the older tire, then this tire will be considered as a final good. Okay. And this final good will be counted in the GDP. Okay. It will not be counted in GDP, it will not be counted in the GDP, but it will be counted in the GDP. All right. Okay. I hope you understand. Okay. So third part over here is what is domestic territory. Okay. What is domestic territory? I have written here in the GDP part. If you see here, it is the money or monetary value of all final goods and services produced in a domestic territory. So what is domestic territory? You have to understand. Okay. So domestic territory is generally, this is the political boundary of a country. That also includes the exclusive economic zones. Okay. Exclusive economic zones. Okay. It also includes the embassies. Okay. It also includes embassies, consulates, military establishment, okay, they all are located abroad. That means if in USA, suppose in USA, right, right? If in USA, suppose this is the embassy of India, right? Embassy of India. Okay. Suppose there is embassy of India in the USA, it will be called as the domestic territory of India. Domestic territory of India. Likewise, if USA's embassy is located in India, that will be called as the domestic territory of USA. Okay, that you have to understand. Okay, so that is the domestic territory. So any embassies, any consulates, or any military establishments which are located abroad, that will be called as the domestic territory of that particular country. Okay, not only this, I'm writing here income from international territory, international territory earned by aircraft, ships, oil rigs, etc., owned by nationals of the country. Okay. Okay. That will be the also the part of domestic territory. Okay, that will be the also part of the domestic territory. So I'm writing over here few examples, right, of domestic territory. You will be able to understand properly. All right, so I'm writing some examples of domestic territory. Okay, here. So example one, I'm writing here. So suppose there is a aircraft flights in USA. Okay, aircraft and flights in USA, aircraft of India, right? Aircraft of India, suppose flights in USA. Okay, that will be counted in USA GDP, not in Indian GDP. Okay, not in Indian GDP. Okay, why? Because that is flying in the USA territory. But if it is, right, so I'm talking about here, suppose this is USA's map, simply, right? Suppose aircraft is flying from here, from west coast to east coast here by Air India, which is the flight of which is the aircraft of the Indian origin. But it will be counted, whatever income it will be gaining, it will be counted as the domestic territory of USA. But suppose if it is, no, suppose if it is coming from India, okay, suppose the aircraft is flying from India to USA, it will be counted as the GDP of India. Okay, it will be counted in whatever income it will be generating, it will be counted in GDP of India. All right, I hope you understand. Okay, so I have written here aircraft of India taking flights within the USA, that will be USA GDP. But if it is flying from India to USA, it will be counted in the GDP of India. So I'm writing over here again, if Air India operates from India to USA, that will be that will be counted in India's national income. India's national income. Another example I'm taking here, example 2, right? If ONGC having oil rigs in Saudi Arabia, right? Saudi Arabia, that will be counted as a Saudi Arabia territory. Okay, and whatever income is being generated within the Saudi Arabia's territory, that will be Saudi Arabia's GDP. Okay, that will not be counted as the Indian GDP. Whatever income that will be generating by the ONGC, it will not be counted as the Indian GDP or national income. Third example I am taking here, suppose an Indian working in UK's embassy in New Delhi, right? So that embassies will be called as the territory of UK, and that will be counted, whatever income it is generating, that will be counted in the UK's GDP, not in India's GDP. I hope you understand. Okay. Similarly, one more example, Tata company, which is of Indian origin, Tata company doing business in Europe. Again, it is coming under the European territory, and it will be counted in the Europe's GDP. I hope you understand. Okay, I hope you understand the things. All right, so here we have completed the concept of GDP over here. Okay, we have completed the concept of GDP over here. Okay, so I have told you already that it reflects the GDP or national income, both reflects the size of the economy. So if you talk about the GDP over here, if you talk about the GDP of 2025, right, as per the NSO's revised estimate, okay, as per the NSO's revised estimate of 2025, okay, the GDP of India in 2025 was 318 lakh crore. Okay, lakh crore. All right, similarly, okay, so we have finished the concept of GDP over here, okay. Then we'll start here the second concept of national income accounting, that is called as the GNP. GNP means second concept over here, gross national product. Okay, gross national product. Very good. Okay, so gross national product over here, I'll be talking about here gross national product, second concept. Okay, so what is gross national product? Okay, so I'm writing here, it is the money value. Gross national product is the money value of all goods and services, produced by nationals of the country in a financial year. in a financial year. Okay, so what we have seen that in GDP, what is important is domestic territory. Okay, domestic territory had the importance. Now in GNP, we have the importance of nationals. Nationals are, we also called them as resident of a country. Okay, resident of a country. Okay, so for example, so to calculate the GNP, generally there are categorization of individuals. Okay, so generally there are three types of individuals. Okay, generally three types of individuals. So suppose this is the India, right? Suppose this is the Indian map, right? Okay, suppose this is India, and within India there are two types of individual. The first one is individual number 1, A. Okay, a person of India, or they are also called as the resident, or in other words Indian. Okay, there is another candidate. Okay, so resident maybe it may be possible that Indian go abroad, okay, and they become non-resident of that particular country. Okay, abroad. So some people go abroad and they become second category. Third category is foreigner staying and generating income within India. They are called as the non-resident. Non-resident. Okay, non-resident. So there are three category of people. Okay, there are three category of people over here. Okay, fine. So when we count the GDP of a country generally, so income earned by people A plus income earned by people C are important. Why? Because GDP always focus on the domestic territory. Okay, domestic territory. So whatever or whoever is gaining within the domestic territory of India, that will be counted under the GDP. All right. Second concept I talked about GNP. All right. So GNP are the nationals of Indian. Okay. So they are focused. GNP focuses on nationals of India. So national either living within India or living abroad. So national income. This GNP comprises of A category of individual and B category of individual, right? That is it. Okay. And whenever also when we write the formula of GNP, generally we include the GDP plus net factor income abroad, NFIA. That is called as the net factor income abroad. Okay, so that is the formula of GNP. Fine. So that is one formula. Okay, so if we apply this formula and write here A plus C, okay, and if we apply net factor income abroad, that means we subtract, यानी कि जो हमारे इंडिविजुअल्स यानी इंडियंस जो अब्रॉड में कमा रहे हैं, है ना, और फॉरेनर्स जो इंडिया में कमा रहे हैं, दोनों को हम अगर माइनस कर देंगे तो हमारी नेट वैल्यू आ जाएगी यहाँ पे, है ना, नेट वैल्यू. ओके, सो हम क्या करेंगे यहाँ पे नेट वैल्यू को पुट कर देंगे. सो सी से सी का कैंसिल आउट हो जाएगा एंड फाइनली व्हाट रिमेन्स इज A plus B. Okay, so either way you can calculate the value of GDP over here. Okay, either way you can calculate the value of GDP over here. Okay, so we have discussed the GDP and GNP so far. All right. Okay, so before moving ahead, we will discuss about some key terms over here. All right, key terms related to national income. Okay, there are certain key terms which are related to national income. Before going in detail, we have to understand what are those key terms. So first key term we will be talking about what are the inputs. Okay, second we will be talking about what is gross value and what is net value. Right, we have already discussed about the domestic and national. Okay, we have already discussed in the GNP and GDP concept. Next concept would be the factor cost versus market price. Okay, 4. All right, next concept would be what is current prices versus constant prices. Okay, so these are the term which is important for the calculation of the national income that you need to understand. Also, there is a concept that is called as the base year, which you also need to understand. Okay, so these things are you need to understand before calculating the national income directly. Okay, so we will discuss here each one by one. Okay, first we will be starting with the what is input. Okay, so first I will be starting over here. What is input? So inputs are generally two types. Okay, inputs are generally two types. One is factor input, another one is the non-factor input. Factor and non-factor. Okay, factor inputs are primary in nature and non-factor inputs are secondary in nature. Okay, what is primary and secondary I will tell you here. So factor inputs are generally land, labor, third capital, and fourth are entrepreneurship. Okay, okay, so through land, income generated called as the rent, labor will get the wages, capital if you invest you will get the interest, and entrepreneurship you will get the profit. Okay, so they are the factor input. Okay, rest other which is not included in the primary inputs, they are called as the non-factor inputs. Example is raw material. Okay, raw materials. All other factors which are not related to the primary, they are called as secondary inputs, and these secondary inputs are generally of raw materials. Okay, so in economics, in strict terms, I'm writing here, there cannot be income other than these four. Okay, so they are generally factor, and these rent, wage, and interest and profits, they are the income generated from the factor inputs. Okay, so they are the inputs, and the land, labor, capital, entrepreneurship are the inputs, and through these inputs incomes are generated. Income cannot be more than these four types of income. Okay, here one thing you need to remember is that value addition can only be done by factors. Okay, factor inputs. Okay, value addition. And second point is income is earned only by value addition. Okay, income is earned only by value addition. That means income is earned only by factors. कहने का मतलब यह है कि ओनली इन इकोनॉमिक्स ओनली दीज फैक्टर इनपुट्स जो हैं, फैक्टर इनपुट्स ही नेशनल इनकम को कैलकुलेट करने में काउंट होते हैं, क्योंकि इन्हीं फैक्टर इनपुट के थ्रू हमारी इनकम जनरेट होती है. नॉन फैक्टर्स या सेकेंडरी फैक्टर्स हमारे लिए वैल्यू एडिशन का काम नहीं करते हैं, इसीलिए इनको हम नेशनल इनकम या जीडीपी में काउंट नहीं करते हैं. रॉ मटेरियल को हम नेशनल इनकम या जीडीपी को कैलकुलेट करने के टाइम पे इसको हम काउंट नहीं करते हैं, ये आपको ध्यान रखना है. ओके, सेकंड पार्ट सेकंड टर्म हमारा है मैंने बताया आपको कि ग्रॉस वर्सेस नेट. ओके, व्हाट इज ग्रॉस, व्हाट इज नेट. ओके, कॉन्सेप्ट gross versus net concept. So generally here I'm writing net is equals to gross minus depreciation. Okay, and what is depreciation? Okay, depreciation is here, it is reduction in value of मशीनरी. हिंदी में से घिसावट बोलते हैं. सो रिडक्शन इन वैल्यू ऑफ मशीनरी और कैपिटल गुड्स ओके ड्यू टू वियर एंड टियर. ओके, यानी कि अगर किसी गुड को प्रोड्यूस करते वक्त अगर कोई मशीन में घिसावट आती है या मशीन में रिपेयरिंग जो की ज़रूरत जो पड़ जाती है हमें, तो उसी को हम डिप्रिशिएशन बोलते हैं. ओके, उसी को हम डिप्रिशिएशन बोलते हैं. एक खास बात और है, इसी डिप्रिशिएशन को हम CFC भी बोलते हैं. CFC का मतलब हुआ कंजम्पशन. ये टेक्निकल टर्म है, आपको इकोनॉमिक्स में देखने को मिलेगा. कंजम्पशन ऑफ fixed capital. Okay, consumption of fixed capital. All right. So here, if we calculate over here, if we calculate, okay, suppose if we are calculating NDP, okay, so this is the net domestic product. Okay, so while calculating this net domestic product, we subtract, right, depreciation from the GDP. Simple. Okay, we subtract. Okay, so नेट वर्सेस ग्रॉस कॉन्सेप्ट है, यहाँ पे हम डिप्रिशिएशन को यहाँ पे माइनस कर देते हैं. सिंपल. Similarly, if we are calculating net national product, we can subtract depreciation from GNP. Again, here net, okay, net concept versus gross concept. All right. Again, so I'm writing over here note. Okay, I'm writing a note over here, that is net concept. Okay, net is better, but GDP is most commonly used because depreciation because calculation of depreciation is very difficult. Okay, you cannot go from one industry to another industry to calculate the depreciation cost. Okay, it is very difficult, so that is why GDP is most commonly used parameter. Okay, next concept I'm discussing over here is domestic versus national concept. Domestic versus national. Okay, we have already discussed in GNP and GDP concept here. So national, if you see here, the national, if you are simply say national, that means it is domestic. Okay, just a second. So if you say national income, it equals to domestic income plus net factor income abroad. We have already discussed. Okay, so on the same line, if we discuss here GNP, that means gross national income, is equals to GDP plus net factor income abroad. Similarly, if you calculate net national product, that equals to NDP plus net factor income abroad. That means here net is changing into domestic, right? Again here there is difference of national and domestic over here, and that is just by adding net factor income abroad. Okay, all right. So I'm writing again, few important points. Note. Okay, note, I'm writing here. So if we calculate, if we compare size of economy at international level, okay, or different economy, यानी कि हम अगर दो या दो से अधिक इकोनॉमीज को या इंटरनेशनल इकोनॉमीज को हम कंपेयर करते हैं तो जनरली हम जीडीपी का यूज करते हैं. जीडीपी इज यूज ओवर हियर. अगर हम इफ वी कंपेयर well-being of people, well-being of people, right, then we use GNP over here. GNP is used. Okay, so you will be definitely asking that what about this well-being we have. No, आप पूछेंगे कि हमने एक कॉन्सेप्ट पढ़ा है जीडीपी पर कैपिटा, राइट, जीडीपी पर कैपिटा और जीएनआई पर कैपिटा, किसके लिए, वेलबींग के लिए, और आप दूसरी कहानी बता रहे हैं ना, आप जीएनपी की बात कर रहे हैं, बट हम आप इसको बता दें आपको कि नेशनल इनकम का पार्ट नहीं है. दे आर नॉट द पार्ट ऑफ नेशनल इनकम. ओके, दे आर पार्ट ऑफ human development report. Okay, they are not the part of national income. Okay, I hope you understand. The next concept is factor cost, right? Factor cost versus market price. Okay, market price. Okay, so what is the difference? Okay, so here if we say what is the factor cost is the cost incurred on factor. Okay, and factor means wage, rent, interest and profit. Okay, so whatever the cost is incurred on the factor, that is called as the factor cost. Okay, fine. And on this factor cost, factor income is calculated. I have already told you. Okay, factor income is calculated. Okay, all right, very good. So, and market price here, we talk about market price is equals to factor cost plus net indirect taxes. That is the story over here. Okay, in net indirect taxes here, that means indirect tax minus subsidies provided by the government. Okay, that you have to remember it. All right, similarly, okay, so let us open it here. So market price is equals to factor cost plus indirect taxes minus subsidies. All right, broadly you can say so. Again, if we open in GDP terms, GDP at market price is equals to GDP at market price equals to GDP at factor cost plus net indirect taxes. Okay, net indirect taxes. So these are the things you have to generally remember. Okay, fine. So what I'm saying here, that in the GDP, I already told you that in GDP, cost of raw material is not included. Only value addition part is considered as the GDP part, or that will be considered in the national income. Okay, so why this factor cost? Why we calculate factor cost? Why we calculate factor cost then? Okay, so factor cost is used to estimate factor cost is used to estimate actual economic growth. Actual economic growth. Okay, why actual economic growth? Because market prices contains taxes. Okay, market prices contains, okay, taxes. It includes taxes. Okay, so actual growth history can be revealed through the factor cost. Okay, and market prices is used for transaction purpose. Okay, it is used for the purpose of transaction. So factor cost reveals the actual economic growth, whereas the market prices reveals are used for the transactions. All right, very good. Okay, in 2020 in 2015 okay, in 2015 we shifted from factor cost to market prices. Okay, we shifted from factor cost to market prices. That means GDP at factor cost is now being calculated. I mean that we shifted from GDP factor cost into the GDP at market prices. Okay, so why this? Why we adopted? Why did we adopt this approach? That is the question mark. Okay, so the justification is that IMF is using the calculation at market prices. Okay, number one. Second thing is if you know for the calculation purpose के पॉइंट ऑफ व्यू से अगर आप देखें तो मार्केट पॉइंट ऑफ व्यू से मार्केट प्राइसेस पे एट मार्केट प्राइसेस direct calculation can be done. Okay, direct calculation can be done, which is not at the factor cost. Okay, not possible to calculate in the case of factor cost. Okay, it is not possible to calculate in the case of factor cost. Okay, all right. So that is the thing. That is why we shifted from factor cost approach to market prices. Right? Okay. So there are criticism also, but that is no longer valid because it was changed long way before, right? 10 years before almost. There have been criticism because there is one criticism here. There is one criticism over here is because there is one criticism is is like market prices includes net indirect taxes. So government can increase this, you can the government can increase this net indirect taxes, and thereby the GDP will also be increasing. Okay, so that will not amount to the real growth. It will not amount to the real growth. That will amount only to the growth of net indirect taxes. That is one criticism. Okay, that is one criticism, very strong criticism at this point of view. Okay, so next next concept we will discuss over here is current prices versus constant prices. Okay, next concept is next concept is next concept here we will discuss about the current prices versus constant prices. Okay, current prices versus constant prices. So what is prices? Current prices means over here is goods and services. Just a second. Goods and services valued at current year prices, that is also called as the year of transaction. That is also called as the year of transaction. Okay, and here constant price means goods and services are valued at base year prices. Okay, so valued here means valued का क्या मतलब है? यहाँ पे valued का मतलब valued का जो मतलब है यहाँ पे, इसका मतलब है कि determining prices. Okay, determining price of a commodity, of a good or commodity. I hope you understand. All right, fine. Okay, so what is the difference between now here? Okay, so if you see the difference here, so constant prices, all right, so we'll be discussing about what is base year over here. Don't worry. So constant prices are generally current prices plus inflation. Okay, so generally there is a base year of is generally considered as a normal year, right, where the inflation, when the inflation was not too high, too low. Okay, from there that is considered as a base, and from there inflation is calculated, that is added in the current prices to reveal about the constant prices. All right, okay, we'll make some illustrations over here. Okay, to make you understand properly, I will make one or two illustrations over here so that you can easily understand the concept. All right, so here suppose there is financial year 2024-25. All right, and there is next financial year 2025-2026. All right, so whatever quantity is produced over here, that will be priced again here, quantity produced and priced. All right, suppose there are 100 quantities produced costing 10 rupees each, and suppose in 2025-2026 financial year there is 110 quantities produced and they are priced 11 rupees, sorry. Okay, so the cost of production, I mean total GDP here would be, the total GDP here would be 1000 rupee, right? and here 1210. Okay, so we are discussing over here GDP at current price. Why? Because prices are being changed as per, all right, as per the financial year. So the same quantities, in 2024-25, 100 quantities are produced. In 2025, 110. But the prices increased, right? Prices increased from 10 rupees to 11 rupees. Okay. So now the change is nearly 21%. So the question is, right? Question is here, does it reflect, does it reflect, does it, does it reflect, does it reflect the real growth? Does it reflect the real growth? The answer is no. Why? Why? Answer is no, right? Why? Because the quantity is changing from 100 to 110. All right, quantity is changing from 100 to 110. So the growth would be 10%, but here growth seems to be 21%. All right, so 21% and 10% are not commensurate with each other. They are not equals to each other, right? So it does not reflect the real story of the growth. All right. So GDP at current prices means what? Current prices means whatever the prices prevails during the 2025-26. Prices are increased. That is why 21% growth is reflecting in the GDP of the country. All right. If we talk about here, GDP at GDP at GDP at GDP at constant prices. All right. Again, suppose 2024-25. All right. Suppose again here quantity produced and prices. All right. Suppose there are 100 quantities and charging 7 rupees. All right. Again here quantity produced is 110 and charging same, 7 rupees. So GDP would be 700 and here the GDP would be 717, right? So the change is only 10%. Okay. So here now again question is, does it reflect real growth? Answer is yes. Why? Why so? Why so? Because quantity is changing 10% and prices are not changing. All right? Prices are not changing, but quantity produced is changing. All right? And GDP is, that means we generally count growth of a country. We generally count the growth of a country. Growth of country is dependent on on quantity, no, change in quantity, right? Just a second. It depends on change in quantity. Both of countries dependent on change in quantity, not the inflation. All right. So constant prices, that is also called as the real GDP. I will tell you. All right. It is also called as the real GDP. So real GDP reflect the real growth. All right. Current prices GDP, they are called as a nominal GDP. They do not reflect the real growth, right? Now, again, so now we have two numbers here, 1210 and 717. So if we say, if I ask you, if I ask you, which one, right? Which one, which one is more meaningful? Which one is more meaningful? Which one is more meaningful? 770 or 1210? Right? The question is, the answer is 1210. Right? Why? Whenever we say value of GDP, whenever we say value of GDP, it is always considered at the market prices. Okay? Value of GDP, value of GDP always, in recent terms, in current terms, generally they are counted at market prices. It is, very much meaningful, right? Meaningful. Okay, it reflects the size of economy. Sorry, it reflects the size of economy. Okay, size of economy, but it reflects the actual growth of economy. Okay, so both are having their own importance. That is why they are actually measured. All right. So, so if currently, currently, if I say currently, if I say, what is the GDP of a country? GDP of India. All right. What is GDP of India? Okay. So, things will come in your mind whether I'm asking at market price or at factor cost. Okay. Whether I am talking about it current prices or constant prices. Okay. So in general, GDP of India, in general terms or in normal talk, generally GDP of India is considered at market prices and at current prices. Okay, current prices. Okay, for constant prices generally talked in terms of real growth. Okay, generally talked in terms of real growth. So currently or 2025, no, if we say that what is the GDP, so we will say here, we would say here we would say that GDP at market price at current prices are nearly 318 lakh crore. Okay, generally 318 lakh crore. All right, I hope you understand. Okay, okay, very good. Again, I'm going to illustrate another illustration. Okay, illustration illustration 2, illustration 2 over here. Okay, important. Why? For the purpose of understanding what is GDP at market price and what is GDP at factor cost and how do they differ. All right, suppose here I'm writing years, here I'm writing production, here I'm talking about here factor cost, here I'm talking about net indirect taxes, here market prices, here GDP and at market price, and here GDP at factor cost, right? So what I'm trying to make you understand that how GDP and how GDP factor cost differ, and what are the important things that you need to keep in your mind. For example, if we say here, right, if we say currently we are talking about 2024-25 years, 2025 and 2026. Okay, suppose there are production of 100 goods here. Their factor cost is 9 rupees, 9 rupees. Net indirect taxes imposed 1 rupees, here 2 rupees. I changed here, right? In the next year, I'm changing the indirect taxes, all right? It has been increased, all right, from 1 to 2 rupees. Market prices thus become, all right, 10 rupees, and here it would be 11, all right? Okay, so now GDP at market price would be 1000 here, and GDP at market price 1100 over here. All right. Why? Because we generally what? Just we generally multiply them. This is 9 into 2, 9 plus 2, 11, 9 plus 1, 10. All right. So we multiplied 100 and 10. We got GDP at market price. We multiplied 100 and 11. We got 1100 over here. Okay. Similarly, GDP at factor cost, we are receiving here 900 rupees, and again next year we are getting 900 again. Why? Because we are multiplying this 100 rupees with the factor cost, right? We are multiplying production product with the factor cost. We are multiplying each other, all right? We are again here multiplying for the factor cost. Okay, so what I'm trying to tell, right? What I'm trying to tell here, it seems that economy is grown by 10%. All right, here it seems that economy is, uh, the growth of economy growth is same. Okay, all right. So is it right or wrong? Is it right or wrong? That you have to reply. Okay, I will say it is wrong. Why? Why so? Why? Because number of product or volume of product not changing, of product not changing, only prices changed. Yeah, in other words, it is inflation. Okay, that is showing growth, which is not in real growth. Okay, so here by just changing the prices, we calculate the GDP at MP, all right, which does not show, GDP MP does not show the real growth. Factor cost 900 remains same. Okay, what does it mean? It means it will only change because it does not include the price change. right? It does not include the price change. So it will change only and only, it will change only when number of commodity or goods or volume of goods increase or decrease. Okay, goods decrease. What I'm trying to say here over here is that what I'm trying to say over here is that GDP and MP do not show growth in real terms. That is what I'm trying to say over here. Okay, fine. So now next discussion over here. Again, there are different variables. All right, different variables. Variables. Just a second. Okay, so here here I want to show you the variables in calculating national income. Okay, what I'm trying to show you the variables in calculating national income. So we have seen here, we have seen generally three broad variables here. Okay, three broad variables we have seen here. First one is GDP, second one is GNP, third one is NNP. Okay, this is the three things. Okay, now these variables can be calculated by using different tools. First one is that is GDP at market prices, okay, at current prices. Okay, I'm writing each one so that you will not be confused. Second one is GDP MP at constant prices. All right. Third would be GDP at factor cost at current prices. And last one, GDP at factor cost at constant prices. Okay, I hope you understand. Okay, all right. Similarly, for GNP, I'm writing here GNP MP, GNP MP, GNP factor cost, GNP factor cost. Okay, again here I'm writing current prices, constant prices, current prices again here, and then constant prices. All right. Okay, similarly NNP at market price, NNP at market price, NNP at factor cost, NNP at factor cost. Okay, again here current prices, constant prices, current prices, constant prices. Okay, so generally here I'm telling you here Okay, so 12 variables are here. Okay, 12 variables are there to calculate national income of country for different purposes. Okay, I hope you understand. Okay, now important thing is here. Important thing is, sorry, 16 variables, right? Similarly, right? Similarly, I'm sorry, I'm sorry. I would like to add over here one more, right? That is NDP. Okay. Again, four variables are there. So out of 16 here, out of 16 here, out of 16 variables, I'm writing here again. Okay. Out of 16 variables, out of 16 variables here, out of 16 variables, only two are most relevant. Okay, out of 16 variable, only two are more relevant, are most relevant. And what are they? First one is GDP MP at current prices, and second one is GDP MP at constant prices. Okay, two variables are more suitably used. Okay, so if we talk about here in 2025 financial year, first revised estimate, all right, first revised estimate, generally the value of this GDP MP is 318 lakh crore, and we have seen growth from previous year is 9.7%, right? Second variable GDP MP at constant prices, generally 209.8 lakh crore. Okay, and the growth from previous year is 7.1%. So this is the data you can remember, right? This data you can remember. Okay, so this is important here. All right, guys. So two concepts are generally, are frequently used. Okay. So some points that you need to understand here, some point here that you need to understand. So we have covered the variables, different variables in calculating the national income. Okay. We have done the illustrations, two illustrations which are important in your understanding. Okay, fine. Again we are moving ahead. So if somebody says, here I'm writing note over here. Okay, I'm writing note. I'm writing note here. note. If somebody says what was the growth of last year, okay, last year here means 2025. Okay, we are currently in April 2026. Okay, so लास्ट ईयर का मतलब हुआ 2025, राइट। तो हम इसकी ग्रोथ देखेंगे कितना, 7.1%। ओके, ऑलराइट। ओके, लास्ट ईयर का मतलब हुआ, है ना, व्हाट वाज द ग्रोथ, एंड जनरली ग्रोथ एज पर कन्वेंशन, as per convention, we measure growth at market prices and at constant prices. Okay, so in size of economy we have seen, now we are measuring growth. In sizes of economy generally we measure the value at current prices, but in the growth terms, right, we measure in the constant prices. All right, one. Second, if somebody asks what is the national income, in what terms do we measure national income? So national income is generally measured at NNP, at factor cost. That you have to keep in your mind. Third, right? Third, if somebody asks what is the size of economy, okay, size of economy, somebody asks size of economy as per convention, size of economy is generally measured at market prices, at current prices. I already told you, all right, current prices, size of economy. Okay, at present it is of 345 lakh crore. Okay, ओके, सो साइज ऑफ इकोनॉमी जनरली हम 2025 का नहीं, 2026 की बात करेंगे। ओके, 2026 की। ओके, बट ग्रोथ, व्हेन वी कंपेयर ग्रोथ फ्रॉम 2024 टू 2025, या दैट मींस जनरली 2025 का ग्रोथ का रिवाइज एस्टिमेट अभी तक आ गया है। ऑलराइट, सो ग्रोथ वाज 7.1%, बट साइज ऑफ इकोनॉमी दैट इज ऑलवेज मेजर्ड एट करंट प्राइसेस. So we are generally measure the whichever year we are going through. All right, so currently 345 lakh crore size of economy that we measure. All right, okay. Next concept over here is, next concept we will discuss over here is the deflation of GDP. Okay, the deflation of GDP. Okay, next concept is the deflation of GDP. Okay, deflation here means adjusting. Okay, adjusting. Why? Suppose there are, all right, suppose okay, deflation of GDP. Just a second. Okay, suppose here GDP at current prices okay, GDP at current prices, GDP at current prices, it is also called as the nominal GDP. We have to convert it from nominal GDP to real GDP, GDP at constant prices. Okay, that is called as the real GDP. Okay, so GDP at current prices, we have 318 lakh crore. GDP at in financial year 2025, and GDP at constant prices, GDP at constant prices. Okay, GDP at constant prices, we have value of 300 or 299.8 something. All right, lakh crore. Okay, financial year 2025. Okay, fine. So now what is happening? So for this conversion, the values, okay, the value should be adjusted. Okay, the value should be adjusted over here. Okay, should be adjusted. That means inflation need to be adjusted, and this work done by GDP deflator. Okay, this work is done by GDP deflator, that you need to remember. All right, so here the formula of GDP deflator, over here would be nominal GDP divided by real GDP into 100. Okay, so that is the formula of GDP deflator. Okay, it measures inflation. Okay, it measures inflation. Now the question is if already CPI and WPI is there, what is there need to have GDP deflator? Okay, so the answer is question, if there is CPI WPI, what is the need of GDP deflator? Okay, what is the need of GDP deflator? Okay, so answer है इसका answer that CPI and WPI generally covers basket of commodities. What do they cover? Basket of commodities. All right, whereas GDP deflator covers overall commodities. All right, commodities. Okay, so that is the answer over here. Okay, that is very precise, that you need to keep in your mind. Generally questions are directly asked. Okay, generally questions are directly asked over here. Okay, fine. So that is the GDP deflator. That is the GDP deflator over here. So here I will write here to calculate real GDP, we must deflate the nominal value to remove effect of inflation. Okay, fine. I hope you understand. Okay, so this was the discussion related to the GDP deflator. Okay, again here, what is important here is the base year. Okay, let us have one discussion related to base year. Okay, so base year is any standard year from which change in prices of goods are measured. Okay, so some characteristic features of base year are they should be the normal year, right? Prices should not go high. Prices and production both should be moderate, right? Second, recent year as far as possible. Third, availability of relevant data should be there. Availability of relevant data must be there. Okay, so that is base year. Okay, that is base year. Okay, so far we have seen 2020 2004-2005 base year was chosen. Second, 11 and 12 it was also base year, and recently 2022-23 has been chosen as a base year. Okay, so it acts as a reference period. Okay, it acts as a reference period. All right, reference period मतलब यहाँ से हम we can compare what? We can compare economical data, any economical data, not only inflation. Economical data, financial, same thing almost. Right? Or index related data. Index data we compare from this particular year. All right. So recently, 2022-23. All right. This base year has been decided on the recommendation of on the recommendation on the recommendation of Goldar Committee, right? It has been recently declared on the basis of Goldar Committee. Goldar Committee. I hope you understand. On the recommendation of Goldar Committee. Okay. So here in general, if I say that GDP, GDP deflator base year, yes, right? Just a second. Okay, so I will write here base year. ओके सो जीडीपी डिफ्लेटर का बेस ईयर अभी हो गया है 2022-23. ओके, अगर मैं कहूँ दूसरा, राइट, सेकंड if I say industrial production index, index of industrial production, again base year is 22-23. okay, again the base year is 22-23. okay, third part, if we use सेंसेक्स, okay, सेंसेक्स का अभी बेस ईयर है 1978-79. फोर्थ, होलसेल प्राइस इंडेक्स का बेस ईयर है अभी भी 2011-12. इट हैज नॉट बीन चेंज्ड, यू नीड टू रिमेंबर. ओके, so these things you need to remember. All right, so base year of GDP deflator, GDP etc has been changed, but that is still, Sensex and WPI base year is not changed yet. Okay, so again one discussion that why 2022-23 chosen as base year. Okay, this is the discussion that you need to remember. The first point is here it was a stable period, right, after pandemic. Stability. Okay, after pandemic it is the stable period. Okay, there has been a structural shift. Okay, the structural shift means structural economical shift. That means now it captures. Okay, so by 2022 or 23 there has been a lot of discussions regarding the gig economy, digital services, like that. So that is the structural shift of the economy. So I have written here, it captures rapid expansion of newer sectors. कौन से newer sectors हैं? Like gig economy, digital services, okay, like renewable energy, like that. Okay, so third, data availability. Data availability. Okay, high frequency data source like GST, right, e-Vahan vehicle registration. So there are numerous modes were opened by the government that enhanced the data availability source. Okay, that is why this year chosen as this year chosen as base year 2022-23 chosen as the base year. All right. Okay. So far we have talked about GDP, we have talked about GNP, we have talked about base year, right? We have talked about different types of uh, basic terminologies that need to calculate the national income. Okay, that is used to calculate national income. All right. So now we will be talking here again. Now we will be talking in reality about the national income again. Okay, national income. Purely we will be talking now here about the national income. Okay, so national income we have seen here. National income, this is national income that is calculated through NNP at NNP at factor cost. Okay, so again it is at current prices. This is called as a nominal national income, and constant prices will be called real national income. Okay, so like that, real national income. So currently the value of this current at current prices, the value is 290 lakh crore, and real national income, the value is 299 lakh crore. Okay, fine. So this is the data of again 2025 financial year, first revised estimate of NSO. Okay, this is the thing. So the now the question is question here is why net and why factor cost. Okay, why not gross? Okay, why net ही क्यों लिया आपने, है ना? नेट क्यों लिया? Why not gross? Okay, so the answer is gross is related to machine. Gross is related to machines. Okay, and they have nothing to do with the national income, I mean income of the individual. Okay, इनकम से इसका लेना देना नहीं है ग्रास, इसी वजह से इसको नेट को हमने चूज किया. ओके, एंड फैक्टर कॉस्ट क्यों? I already told you that any type of income which is used to calculate the national income will be always the factor income. Okay, always the factor income. That is why factor cost is chosen. All right, why not market prices? Market prices includes the indirect taxes and it indirect taxes, and which is imposed on goods. Okay, it cannot be imposed on income of individual. That is why factor cost is not chosen here. All right, so I hope things are very much clear now. Okay, things are very much clear. Okay, so again, I'm opening a discussion over here. I'm opening a discussion over here. Suppose I'm opening our discussion over here. So national income we have talked about here. NNP at factor cost, current prices, constant prices. Okay, very good. So again, see, NNP at factor cost would be the GDP of a country minus depreciation plus net factor income abroad. Okay, this is the formula. So we have seen the current prices and constant prices. At constant prices, it is called the real national income, right? So the formula is NNP at factor cost that could be calculated by reducing the depreciation and net factor income abroad. Okay. So you should have seen that GDP and national income is not same. To get the national income from the GDP, depreciation and net factor income abroad has to be subtracted. Okay, that is the thing. Again, if you see NNP at factor cost is equals to GNP. Okay, there could be several combinations to calculate. Okay, depreciation. I hope you understand. Okay, so both these formulas could be applied. Both these formulas could be applied over here. Okay, fine. So if we uh, made a flowchart, make a flowchart. Suppose GDP at market price, right? Then GNP at market price, and third one is NNP at market price. Okay, so for financial year 2025, real values. Okay, let us see the values. Financial year 2025. Okay, this is NSO second, sorry, NSO first revised estimate. Okay, so GDP-MP is here. GDP-MP, it is here 318 lakh crore. Here it is 314 lakh crore, and here it is 285 lakh crore. Okay, okay, fine. Okay. Now what does it entail? What does it entail? Okay, so whenever you calculate GNP, all right, whenever you calculate NNPMP from GNP, what you have to do, you have to reduce the depreciation, right? You have to reduce the depreciation. I hope you understand. I hope you understand. Okay, depreciation you have to reduce. And what is the difference between GDP and GDP-MP and GNP-MP? What is the difference? Difference is net factor income abroad. Okay, net factor income abroad. So generally difference is in minus. All right, almost 4 lakh crore. Okay, almost 4 lakh crore is this is negative. Generally negative means that net factor income abroad is negative. of 4 lakh crore rupees. That means person living in abroad, all right. That means person, Indian people living in abroad and foreign people living in India. All right. This is India. This is foreign. So foreign people living in India, they are gaining or their income is more than people who are living in the foreign territory. All right. They are Indians. Just a second. Just a second. Okay, so on foreign land, Indians are living. In India, foreigners are living. So foreigners are gaining much more than the Indian living in the foreign land. That is why. That is why this negative, 4 lakh crore net factor income abroad is the negative for the calculation of Indian national income. I hope you understand. Okay, and this is the thing that you have to remember. So what is the difference between GNP and this depreciation? So depreciation is generally 29 lakh crore almost. Okay, if you subtract from the GNPMP. Okay, so I hope you understand. So this is the process that we follow in calculating national income. This is the process that we follow the calculating national income and the way we calculate them. Okay. So here you have to think of that why this NFIA is negative for the India. Okay. All right.